Everyone, Sheena Hansen here. Thanks for tuning in to our frequently asked questions series. And today I'm going to be answering, is now a good time to get in the market? I have a lot of clients that have moments in their life where they need to invest a chunk of money. Maybe they have cash in the bank. Maybe they receive an inheritance. Perhaps they're contributing a lump sum to their Roth IRA every year. And so when is the best time to put that money to work? I know you've heard the saying, buy low, sell high. And so ideally, it would be nice to get cash to work and in the stock market after it's pulled back from a high. Maybe you want to wait around after a market event where it's gone down by 10% or 15%, and you can really get in when the market's on sale. But it's really hard to time that perfectly. And sometimes when the market has pulled back, the fear kicks in and, oh, maybe now's not a good time to invest. And so you get on this emotional roller coaster of being perfect with the timing versus just getting in the stock market, which tends to really matter the most, time in the market. History has shown that the longer the period, the greater the chances of a positive outcome. And if you look here, in a 5-year period of being invested, looking at the stock market, history has shown that 93% of those years of that time, the market is up. And over a 10-year period, 100% of the time, the markets are up. And so you really want to make sure that that money that is being invested is really long-term money. And then timing doesn't matter as much. It can feel like that it just seems like never is going to be a good time to invest because markets fluctuate. We've had a lot of recent market highs and we'll continue to have market highs if history continues. So I really am not a believer in trying to time lump sums and getting it invested. And I think almost any time is a good time. So I'm going to get a little personal here. This chart is an example of when trying to time the market or waiting for a good time doesn't work out so well. I have an investment account that I like to have a portfolio management role in my own financial affairs. And I had some cash back in 2023. You can see that here on the chart that was ready to invest. And I just didn't take the time to start the investment process. I held off for different reasons. And during that time frame, the market had dipped down and then it recovered rather quickly. So the line chart here, the blue line is actually my personal account here. And as of today's date in 2025, that return on investment is about 20%. But if you look at the other lines, the green line and the yellow line, those are benchmark returns, the S&P 500, there's another benchmark in there, and they're much higher. The green line is at about 30%, the S&P 500 is at about 40%. And so the difference there, the difference of my return on investment versus the overall market is simply the fact that I waited to get in. I had no good reason, but I missed out on significant returns there. And so I've really lived by example here, and hopefully, you can learn from it too. But timing the market doesn't always work. I think time in the market matters the most. And, we're here to help you get that money to work, get investing, and not have to make those decisions on your own. Thanks for tuning in.